I'm Jamie McDonald, and I was a fund manager in London and New York for 10 years. In that time, ESG investing was certainly something we talked about, but it wasn't something that really mattered. And it didn't matter because it couldn't be valued, and therefore it didn't really affect market sentiment. But now I've got a feeling that's going to change.
So I'm here, I've made it to Davos, I'm through the tunnels, I'm through the numerous security checks, and I've got onto the high street. Now, I'm already getting a sense of the kind of chaotic atmosphere that's going on. There's people in ski suits and business suits, there's expensive cars, there's cable cars. It's sort of mayhem, really. I know already I'm going to have to grab people in between their meetings as they come out of interviews, very much on the fly.
Hey, how are you?
I'm really good. Thank you so much for taking the time.
Always pleasure.
I'm going around Davos and I'm speaking to people about this shift that's happening in terms of environmental investing.
Yes.
And there's talk that 2020 might be a tipping point. Now, I really do value your opinion on this. Is that something you agree with?
You know, I started to feel this was happening a couple of years ago. I think 2019 was the transition here. Millions of people started to understand that the environment was much more than something given to us. We had to actually have a return on this. And I think businesses understanding this. If you're investing in sustainability, you're improving the quality of business. Sophistication of consumer, more and more consumers that want to know where the things are coming from. I think 2020 is really the beginning of maybe the 21st century, finally. This is the echo chamber that will push us and propel us to the future.
Across town for a meeting with David Craig. He's the CEO of Refinitiv. They are a data company right at the heart of this issue on ESG because they're at the forefront of helping companies and governments both monitor the issue and measure it. So really interesting. It feels like 2020 is going to be the year for green investing, but why now? Why 2020?
The reason that it's core is that people are realizing the price of the harm that we're doing to the environment, be it carbon emissions or carbon equivalents or illegal logging. That price isn't factored in. It's going to mean a reprice of many assets and funds and debt and liabilities. And when you talk in those terms, when central banks say they're going to ask companies to look at this, you know that actually a substantial shift is coming.
So this shift is going to lead to a reshaping of the world of finance?
Yes. Finance is going to be reshaped. I think there's no doubt in our mind that this is going to happen. And people have talked about this for many years, but now I think everything's coming together to say the shift is coming. The question people are asking is not if it's coming, it's how quickly. Is this a cliff event? Or is it a gradual shift over several years?
David, what is going to be the role of data within all of this, and how can we use that data?
Well, the data is incredibly important because if you want to understand the environmental footprint, the emissions, for example, or the water usage of the investments you're making, you need data. You need to understand what those are, and you need to compare between companies to make those investment decisions.
You've been quoted as saying that financial markets need to prepare themselves for this impending carbon correction. What do you mean by that?
Companies and funds and banks are going to revalue instruments based on the true forward-looking likely price of carbon. And that they would move that estimate so that they'd incorporate an overall revaluation of those assets. And the overall impact could be significant, but of course it won't be uniform. It'll be different from high carbon intensive and carbon equivalent emissions industries to low.
So that was David Craig from Refinitiv. And what I took away from that was the debate previously may have been, is climate change happening or not? But that's not the debate anymore because companies and governments are making that shift. The debate now for investors is, this shift is happening, how am I going to be able to profit from that? And clearly at the centre of this is data, because it's data that makes people accountable. And I think it's data that's going to be the catalyst for this shift to happen. One thing I've noticed is that the shops and stores, I don't know if you can see, they've been taken over by some of the larger corporates around the world, and they've turned them into their headquarters for the next few days, while presumably they talk about their agenda for the next 12 months. Now, Shanan, I know you've just come out of a private WEF session here at Davos. As much as you can you tell us who was there, what you talked about, and what your conclusions were?
This session, which was banking on sustainability. So it's the financial services industry, banks. There were CEOs of some pretty important banks in the room.
Can you tell us who?
No, I cannot.
Okay, all right.
But we're all passionate about the subject of, obviously, the topic, which is the climate crisis and the financial services role in the climate crisis. And it was fascinating because I think that there were two really key threads or themes of this, which was to differentiate between climate risk and climate transition. Climate risk is evaluating how much risk you are exposed to with the carbon that you have in your portfolios, and are you financing the climate risk? And what was interesting is the voices around this forum were all in favor of a carbon tax, and really, to the point of we're ready for it, and we would like this tax to be proportional to the damage it's doing to the climate.
Now, what about those companies that are using carbon now? I mean, they can't just switch overnight. There's got to be some sort of transition phase. Did they talk about that?
Yeah, absolutely. So that was the second part of the topic, which was the climate transition. And there was this notion of, it's not a binary thing between what they started calling green assets and brown assets, right? So green obviously being carbon, limited or neutral, and brown assets being those dirty ones that are quite carbon heavy. So we can't just divest from the brown ones is the notion, but that the financial services industry and banks in general really need to invest and finance the transition. So keep investing in, let's call the brown assets, but do so with conditions in place that makes it apparent that the funding is going towards the transition to renewable energy sources.
Well, Shanan, thank you so much. You've literally given us insight into what's going on behind closed doors. So thank you for your time.
Absolutely, no problem.
Von der blauen Erde kommen wir. Unser Klima stirbt genauso schnell wie wir. Und wir reiten den Planeten immer schneller in den Keller von der blauen Erde kommen wir.
So when we arrived this morning, there were certainly a few protesters around, but we're talking like tens of protesters quietly marching up and down the street. You can tell there was a sense of protest, but here we are, 6 or 7 hours into the day, and now we're talking hundreds of protesters, all singing and chanting behind me, as you can see.
Und wir reiten den Planeten immer schneller in den Keller von der blauen Erde kommen wir.
We're very lucky indeed to have grabbed here former Prime Minister Helen Clark, who's literally dashing in between meetings and interviews. So we've got this opportunity to ask her a few questions, which, if you don't mind, I'm just going to dive straight into. So when it seems like this financial shift is happening in markets and more credit being given to those companies who are behaving, should we say, more responsibly, do you think that's going to come from shareholders, or do you think it's going to come from governments and policymakers?
No, I think it's going to come from the public. I think it's going to come from the consumer.
If you're a company who's not taking ESG and the data around ESG seriously, are those going to be companies who fall behind?
I think they'll suffer financially as consumers increasingly make their choices, wanting to know what the whole value chain was. How was this made? What were the ethics behind it? Was it sustainably produced? Was the labour exploited? People are asking these questions.
And they're asking these questions more and more as we go through 2020.
More and more, and the companies that don't measure up are going to suffer financially, in my opinion.
There you go. Have a seat on that.
So it's very clear that this shift in financial markets is happening, and that's going to produce winners and losers.
So what we want to know is, who are going to be the winners and losers, and when are we going to see that divergence starting to happen?
At Davos for many years, the whole conversation about ESG has been sort of present, but this year there's a real palpable shift from a rhetoric to an urgent call for action. There is a real top-down push from responsible governments, and then there is a huge groundswell and a surge of emphasis, particularly from the millennials. And I think the companies that win are going to be the companies that have real strong proof points that they're not just focused on a financial bottom line, they're actually focused on sustainable performance that is good for shareholders, but it's good for employees, it's good for customers, and it's good for the planet. I think the corporations that do that convincingly And with integrity, they will attract more customers. They'll attract a stronger talent base because millennials all want to work for companies that have a real commitment to sustainability. And those companies, through changes that are taking place, sweeping changes that are taking place in financial services, are going to have much greater access to capital and much greater access to financial services. They'll be the winners. And conversely, the companies that fail to make that leap, they'll lose on every one of those dimensions.
Do you think investors going forward are going to get much more, they're going to require a lot more transparency into the ESG compliability of the companies they invest in and the funds that they invest in? And will there be a shift of money away from general funds more towards these greener funds?
Yeah, absolutely. Financial services firms are really looking for the data proof points of companies and the data proof points of their funds. Investors are seeking them out. Most corporations today that are going on, let's say, a roadshow listing to go public, the number one question that they are asked is, what is their ESG score? Investors are going to be putting pressure on corporations to make sure that they understand the ESG scores of the companies that are in their supply chain as well. So the knock-on effect of this is going to be extremely pervasive. Companies that have very, very, very advanced and proactive practices around diversity and inclusion are actually the highest performing financial companies out of the 7,000 companies in our database.
Well, that was really interesting. As Deb was alluding to, it's those companies that are paying attention to issues around ESG that are outperforming. So ESG is now at the forefront of investors' decisions because it's becoming a deciding factor between those that win and those that lose. There are some people out there, some cynical people who don't believe in climate change. What would you say to those kind of investors?
We don't even necessarily have to have the conversation about whether you believe in climate change or not. Let's have the conversation about what are you concerned about in terms of risks and opportunities for your portfolio. We're seeing increasing evidence that weather patterns, water shortage, food shortages, energy shortages, material shortages, that all of these things are increasingly realities when you have a continuing growing population and a finite planet. So if you as a business person or investor care at all about any of those inputs of costs or risks to your business, then you need to care about this whole suite of issues. Many of those things happen to be involved in or affected by sort of the mega issue of climate change. I mean, think about it another way. If I said to you, would you like me to invest your money in a way that ignores a number of factors that could affect your business? Whether that's weather or water or pollution, or do you want me to take into account those things that could be risks and opportunities to your business? I don't know many investors who say, please ignore all those macro mega trend effects.
Now, you're talking about the change happening, and I want to talk about the pace of that change, because in 2020, I'm walking around Davos and I feel like a lot of people are talking more about this topic. Do you feel that 2020 is a real tipping point for this industry?
I think now that it's sort of bubbled up to the level where you're hearing pretty much every CEO here at Davos talking about how do we do this? How do we integrate this into our sustainability strategy? That it's really, we're at this tipping point where I think there's been a psychological and sociological shift to understanding that. There's been more and more data supporting that you can actually do both. And in fact, good business, good asset management, running a company well, all involves thinking about the environment and how your business affects that. When all these things come together, I think we're really just going to see, a real sea change.
So this shift seems to be coming from so many different angles. It's coming and all the stars are aligning. So investors stop thinking whether climate change is real or not.
Right.
The fact is, the future for those companies who are not being ESG compliant is going to be more difficult.
Exactly. I mean, look at the reality of all these factors that are coming together. And again, I don't know any investor who will ignore regulatory issues, ignore governmental changes, ignore commodities prices, ignore new markets that are emerging, and other markets that are becoming more risky. Exactly.
I just got a message saying that if I'm quick, I've got 2 minutes with Jimmy Wales, so I'm off to try and grab him. Jimmy, thank you so much for taking the time. So we've got really one fundamental question we want to ask, which is 2020 a tipping point for the world of ESG?
I do think so. I think there have been a lot of important developments. I think the sense of urgency around climate change is stronger than ever. I think companies are now beginning to realize that their customers are demanding it, their employees are demanding it, and that there's actually opportunities in it. I think there is a moment here where caring about some of these issues is no longer just like a do-gooder thing, but it's actually profitable. And if that's true, then we're going to make some progress.
And how do you think this area is going to affect the valuation of companies?
Well, obviously consumers care about these issues more than ever before. Governments care about these issues more than ever before. This means there's pressure on companies. Ultimately, I think companies need to answer to their shareholders, but I think shareholders are beginning to realize that these things actually do have a positive impact on the bottom line, doing the right things. Consumers, as their tastes change, then it's going to have a negative impact on companies that don't wake up and actually get ahead of the trend and have an image with consumers like, yeah, you actually care.
Now, a follow-up question to that is investors have previously, to some extent, ignored ESG as a topic because it hasn't typically made you money to be a green investor, should we say. But now would you say that investors have to wake up and pay attention to ESG because those are the companies that are going to basically outshine?
I mean, yeah, if you're an investor, it's just like every single sort of fundamental shift in society. If you're ahead of that trend and you recognize that trend, there are opportunities to make money. And so being a green investor that's simply trying to sort of do good might not have had superior returns. But if you're entering into an era where we're fundamentally transforming the infrastructure of society, hey, you better be ahead of that, and there's going to be returns to be made.
I'm getting towards the end of the day here in Davos, and of what's been quite a long day, to be honest. I've met with politicians, financiers, tech experts, data experts, ESG experts, obviously. And I've had so many conversations that what I want to do now is just go away and have a real think about everything I've talked about today, and then in the car come up with some conclusions and finally work out, is 2020 the year when we see this real shift and ESG is at the forefront of investors' minds? As I look back on my time at Davos, it's clear to me that whatever your views on ESG investing, and I was definitely a cynic, we're now at a tipping point. Seismic changes are coming, and that's going to create massive opportunities for investors. The huge increase in ESG data, led by companies like Refinitiv, is the catalyst, because it means that after years of false promises and greenwash, companies are suddenly going to be accountable, and this will surely be reflected in their valuations. David Craig called this the carbon correction, and he says the adjustments could reach trillions of dollars. This will trigger extraordinary shifts in prices. The trick for investors is to get on the front foot in terms of risk management, while taking advantage of the new profit opportunities that'll be created by this shakeup. Hold on to your hats.